Welcome, everybody. We have a special guest in the building. Bitcoin has seen blood in the streets. We've had a lot of turmoil from about 69K all the way down to 25, and everyone's wondering what's next. What's that next major move? We have pro trader Gareth Soloway on the show joining us again, and he's going to provide his honest take. Gareth, much like our channel, he talks about just the facts and the charts. He's a highly skilled trader. He's becoming a legend in the crypto space. We're lucky to have him here on our channel, and he's going to give his take on a lot of different topics in today's video. We're going to walk through, when is this bear market going to bottom? And we're also going to talk about altcoins and what you should be thinking about during that time. We're going to touch on some trades that Gareth is looking at as we speak. And most importantly, we're going to unveil Gareth's price target. So Gareth, welcome to the show. Phenomenal to have you.
Hey, thank you so much for having me back, and wonderful introduction. Thank you. It's great to be here.
We're glad to have you. You're a fan favorite. And we would love to start with kind of your pulse on the market. What is your take given this fall we've had? What do you think is happening now, and what are you looking to happen next?
Yeah, so it has been a tricky market, and it's not just the crypto market, the stock market. Many markets out there have been struggling because as the Fed's been pulling back on monetary policy, they've been sucking liquidity out of the system, right? So you have less money in people's pockets and people's accounts. Higher interest rates mean people can borrow less to invest. And ultimately that creates a scenario where asset prices are going to decline. The Fed kind of, choreographed this in late 2021. They said they were going to do it. I think a lot of investors kind of didn't believe them because in the past they've always been soft with the markets. In other words, they didn't worry about inflation because there wasn't inflation. Now there's massive inflation and they have to actually be hard with the markets, kind of that strict parent at this point in time. So I think at this stage of the game, you have to continue to be very, very careful. The Fed is certainly not done doing what they're doing. The question is, at what point do the markets factor in a worst case scenario with the Fed? Meaning that at some point the market will say, okay, they may raise 10 times or 12 times, and then that'll be kind of the maximum. And the Fed may come out later on and say, hey, we're only going to do 8 times or something like that. And that's where you get a bottom in the markets. But unfortunately, we're just kind of at the beginning of this cycle, it seems. And unfortunately, the beginning of the cycle has already seen a massive decline in crypto prices, stock markets, and so forth. So I would just suggest, in terms of the overall market view, continue to be very conservative. There's nothing wrong with being in cash, especially the dollar's been relatively strong, even though everyone's worried about inflation. And again, wait for the opportunities. Wait till you really see a bottom forming, then start to deploy more capital.
I love that. Now, with the bottom forming, what kind of things are you looking at in Bitcoin right now? Are you on the sidelines? Are you looking to enter position? Now, a lot of folks who are trading less than 5 years, this might be their first ever bear market. What would be your words of wisdom to somebody who's dealing with these tumultuous times for the first time, seeing their account whittled away for the first time, dealing with that stress and agony? Because as you know, Gareth, as a trader of many years, when you make a bad trade, your beginner mindset is like, let me make it all up on this next trade. What would you say to folks right now who have lost a whole bunch of money? What should they be doing with their portfolio, if any is left?
Yeah, so I mean, the first thing I'd say is welcome to the club, meaning that it's not fun, but each and every one of us as a starting investor, we go through this, right? So we go through initially starting to invest, thinking it's the easiest thing in a bull market, making lots of money, being like, oh, why didn't I do this 10 years ago? I'd be a zillionaire by now. And then the market goes into a bear market and we get punished. So, I mean, it's not a great club to be in, but I think every investor has been through it in their early years. And the hope is that you learn from it, right? We all have to learn from it. For me, I've been through it multiple times, 1999, 2000, 2007 through 2009. And then there were mini bear markets along the way. And so I've been burned enough times where I kind of saw the signs, the writing on the wall, when there was insane euphoria. Everyone just thought it was the easiest thing in the world. You had GameStop, AMC, crypto prices going insane. And I started to pull back, and I said, all right, listen, I got to be more careful here, because I remember touching that hot stove and how much it burned me in terms of my monetary wealth multiple times. So I think that's the key, is just to say, okay, it will come back. It may take a while, but ultimately I do think it comes back, and you just have to be protective. Don't try to make it up in one trade. The market is never nice to us, those of us that try to do that, right? So we have a scenario where like you said, Steve, is people want to make it up so quickly. And the essence of it is bear markets will punish those people, and you'll end up even down more in your accounts. So be patient. Always remember, the markets will go lower than any of us think, just like they go higher than any of us think. I mean, if you look at the charts on GameStop or AMC, I mean, who would have thought those stocks would have gone, GameStop going to $300, $400 a share from $20 or $15? I certainly never thought that. And so on this downside, stocks and crypto prices will go a lot lower than any of us think. I know when I started calling out 20,000 back when we were at 65, people thought I was nuts. Then it got to 50, then 40, and now 30, and even sub 30. It's just the nature of bear markets to take things down and whittle away the average investor. The way you know it's a bottom is when everyone else doesn't believe there is a bottom left. So anytime you hear people saying, oh, that maybe this is the bottom, maybe I should start buying, it's probably not the bottom yet.
I think that's a great point. That's a fantastic point for folks to hear, because what folks try to do is, when everybody starts saying the same thing, they believe it to be true. But it's precisely the opposite that usually happens. Now, a lot of folks who are beginner traders are going to pick a number, and they're going to say, if it hits this number, I'm going all in. I'm putting everything in. And as you know, Gareth, those people usually sit on their hands, and they're sitting on their hands while we're in the midst of the next bull run. What would be your advice to folks that have a number in their head and they're not going to buy unless we hit that number?
Yeah, so I think with those scenarios, you have to kind of move away from that mindset. I mean, you never want to be in a mindset where you're going all in at a specific price. So number one is, it basically means that you're either going to be dead on if you get in, or you're going to be very, very wrong and lose a lot of money. So my philosophy, and this is something that changed from my early trading years, I used to be just like that. I'd say, all right, well, this stock or this crypto, and back then it was stocks, this is at a major low. I'm going to buy it. I love the company, and I'm going to be right. So I got to put in all my money. And in essence, I'd be wrong, and I'd end up losing 20% more on it, or maybe more. And it would be painful. And potentially what it does is create an emotional reaction where it pushes you to enough pain where you might even decide to take that loss, where you just throw in the towel. The way you avoid that is by doing small amounts. So my biggest new philosophy, and this is something that, I call it new, but it's really over the last 10 years, since I've been trading for 20 years, is to buy small and buy multiple times. So what I'll do is I'll say, okay, I love the 20,000 level on Bitcoin. So I'm going to put, let's just say I don't know if it's going to be the low. I'll put in 1/5 of what I ultimately want to own. I'll put it in at 20. And then maybe at 17, I'll put in another 1/5. And at 14, I'll put in another 1/5. And what you do is you just kind of space out these orders. And this is the tricky thing, is that as you get lower and lower, you're going to start doubting yourself. You're going to say, oh my goodness, this seems like it will never end. Will Bitcoin survive? Will it go to 2,000? Will it go to 4,000? And the bottom line is, you have to kind of think to yourself logically, number one, where are you getting in? Do you believe in your thesis longer term? And then you just have to slowly inch in, very methodically, very robotically. As soon as you let emotion take control of you, and this goes for trading anything, you've almost given up at that stage. You've almost taken the loss already. So you have to be ahead of the game. You have to know your levels, and you have to go in slowly. I definitely suggest dividing up the amount of capital that you want to invest and spacing it over a large area, because we don't know where Bitcoin will bottom. It could be 20, it could be 21, it could be 18, it could be 15, it could be 5. And the key is to be safe. It's better to have some and have a better average, and maybe not get filled on your last little bit, and then ride it up with an average price, let's say of 15,000 to 500,000, versus going all in at 20 or 25 and then being stopped out when it gets to 9 because you couldn't take the pain anymore.
Yeah, that's a great point. And the pain is the key in the bear market. There's just an absurd amount of it, and only the strong will survive. I got destroyed like you, Gareth, in the 99 2000.
Yeah.
I really got destroyed, and my ego was in the way. It's tough. So
It is.
people like Gareth are here to help you, and Gareth has a trading group, right? A membership group that everybody should go to check out. Gareth is really a smart technical trader, a swing trader. It's verifiedinvestingcrypto.com. We'll have the link down below.
Thank you.
And what I would love to hear, Gareth, is what's your trade right now? Are you in the market? Are you waiting to make a trade? Show us in the charts what you're looking for and walk people through your mindset as a professional trader.
In terms of Bitcoin, I do have a little exposure to Bitcoin. I have about 12% of my portfolio long Bitcoin right now, basically break even right in this range here. And the reason is, and number one, notice 12%. I'm not saying 50% or 100 or 10 times leveraged, right? So it's understanding that we're in a bear market, which is number one. So it right away tells me not to go in heavy, right? The number two factor is really always the charts. It's not how I feel. Well, what does my gut tell me? All that is nonsense, right? In the trading world, the market doesn't care. The charts don't care. They're going to do what they want. They're going to abide by themselves. And so again, it's all about the charts. And what I did was I found this. So we had this bearish kind of pattern development that was, I think the last time I was on, we discussed it, right? It was this big move down. It was this sideways chop, which was bearish. And then you finally broke lower. And what I found is you have this new parallel trend line from here to here. And it actually, when we panicked with the UST collapse and the Terra Luna collapse, it pierced this line right here and then got back above. So basically at this stage of the game, I looked at that and I said, okay, well, we are at support. So there's technical support right in here, this trend line. As long as we hold that trend line and don't confirm below, I'm going to be a small bounce player on Bitcoin. Now, important to understand my time frame. This isn't something where I'm saying, okay, guys, I'm buying here for the next 5 years. This is a swing trade, which generally you hold for weeks or a couple months. And it essentially anticipates that as long as we hold this low line, there's going to be potentially upside. So right now, for instance, if we look at the chart, you can kind of make a case that you have this downsloping trend line on Bitcoin, right? So the idea is you have actually an upsloping as well. You're creating this little flag pattern, and based on the oversold nature, and as long as we hold this lower white trend line, I'm going on the likelihood, the slight probability that we're going to have a move up. Now, again, targets are not that high, to be clear, right? So before you get in a trade, you always want to say, okay, if I'm going to enter this trade, what am I going to put at risk? Where are my next adds if I need to? Where am I going to exit the trade if it doesn't work? And then ultimately, where are your targets? And targets are important because you don't want to go into a trade that's a swing trade and say, hey, I'm looking for 65,000. That's unrealistic, and you'll be holding it when the next wave down comes. So instead, what I do is I just look at previous pivots. So for instance, we have one right here that's at basically 33,000. All right, so that's my short-term first target. And again, there's your little trend line. So if we break above here, I'm probably starting to take a little bit off the table right at 33,000. Your next pivot is just above that at 34.5. I'll probably take a little bit more off there. And maybe what I'll do is I'll hold a tiny bit just in case we rally all the way back to what I call the scene of the crime retrace, which is back here. So this was your initial breakdown trend line here, and this would be a retrace to that level. So again, notice how I'm not getting overly ambitious or aggressive in terms of my price targets. I'm looking to leg out, which is basically where you take some off the table in a small profit, another a little bit more up, and then maybe you hold that small amount just in case it makes a bigger move. But none of my targets are like 60,000 or 65,000 here. There's too many resistance points ahead of me. I'm not expecting that. So basically, again, it's a very calculated. Everything a smart pro does is very, very calculated. Steve, I know you do this too, and it's all about really understanding risks versus rewards, understanding exit points versus targets, and really looking at the chart and saying, okay, what am I going to do right in this scenario? And obviously, number one is always putting the smart amount of capital to work, not the over-aggressive amount of capital, right?
A lot of key points there. And I'm glad you brought up those points, Gareth, because so many people in crypto need to hear it. I feel like the stock market, it has a lot more disciplined traders, a lot more traders with a lot of experience, where crypto, there are a lot of new traders. And unfortunately, a lot of people are going to get really hurt. But having a plan of precisely what you're going to do before you enter a trade has to be step one. But it's the most difficult step, because everybody enters a trade based on emotion, or what they hope is going to happen, or what their gut is telling them, or what they heard on YouTube from one person or another, unfortunately. But having a plan is key. Now, it sounds like, Gareth, you're more bearish than bullish. What if we were to get above that quote unquote scene of the crime at 42? Would you become more bullish, or would you still be hesitant?
So basically, I would become less bearish at that point. There's no doubt about it. So you had this bear flag breakdown right here, right? So that took us down. Now, if we were to somehow recapture that area, I would start to say, wait a minute, this is an impressive reversal in the charts. It's something that we have to pay attention to. The bigger level for me, and what's interesting, these lines could actually merge, is see this upper trend line sloping down, right? So that one, maybe this lower scene of the crime level is going to be sliding up. This is going to slide down. They might meet around 42,000 or so, depending on at what point price maybe gets up there. Now, if you got above both of those, then I would certainly get a little bit more intrigued in terms of becoming more bullish. So there are absolutely levels, right? As a technician of the charts, you never want to be all bullish all the time or all bearish all the time. Just like I'm talking here is like, I'm actually, even though I'm net believing we're in a bear market, we're headed lower on Bitcoin, I'm actually short-term slightly long Bitcoin. So you can be kind of contrarian in those views, even when you have a midterm or longer term view that might be the opposite. So I think that's important. But yeah, I think if it did trade above this and this line, I would then start to become more intrigued. I also think that you have to recognize this upper line will be resistance, but it is sloping up, right? So it's already at 52,000. You could be 6 months from now, that could be at 60,000. And so again, you start to get these lines where if they break, the next resistance levels get higher and higher and bring us close to those all-time highs at that point. I don't think that's the likely scenario, Steve, but it is important as a trader to always look at all angles.
Absolutely. Now, what I would like to ask is swing trading. I know you're a fantastic swing trader. You do a hell of a job. You teach it really well. Is it for everybody? Because a lot of people are in crypto, they're relatively new to trading. And what you just described, it may be like, oh my God, this is really difficult. I don't know how to take all of these steps. What would be your advice to them? Should they do swing trading? Should they start somewhere else?
That's a good question. So I think the number one thing is you want to at least understand the market dynamics a little bit. Swing trading is something that if you follow someone who's good, you can get their signals. I send out text, email alerts. We have an app that's going to launch soon that has push notifications. So generally, swing traders can have jobs that they go to during the day as long as they have that ability to check their phone for an alert. But again, I'm a big fan of knowledge. Education is so important when it comes to this kind of stuff. Understand the difference between investing, which is more of a very long-term view, and swing trading, which is much more of a, well, what's going to happen over the next 2 weeks type move, and trying to capture those moves. The positives on swing trading is that as a swing trader, you can make money both sides of a market, whether it's going up or down. And so a lot of people say, hey, all these people that bought at, 5,000 or 10,000 on Bitcoin are doing so much better than swing traders. That's actually not necessarily true. Because again, as a swing trader, if you're kind of going long and short at the levels, going short up here, going long down here, short up here, long down here, riding it up, and vice versa. If you're playing all these ups and downs on the market, and this was a big one for me, I went, long, short, and then, long here for a mini bounce, and then again, the drop, and then we're long again here. The idea is that if you can make 10%, 10%, 10%, 10%, you can actually outperform people that are investing for the long term. But again, it does come with some risks. Sometimes they go against you, the trades. But then again, in a bear market, people that bought at 60,000 are down over 50% of their money. So again, a swing trader usually doesn't have those risks because we're in and out so often. So I think for the most part, swing trading is something that anyone can do, but I do recommend, as always, education. Start understanding a little bit more about the markets, the charts, at least so you know when traders are giving you trades, is this a smart trade? Does it make sense? Is it at support? Those type of things.
I love that. So Gareth mentioned he has alerts. We'll have his link down below, and we wouldn't have anybody on the channel if we didn't believe in them. Gareth is phenomenal at what he does. Gareth, what I would love to touch on next is, when is the bottom? Not necessarily the price. We'll keep your price target for a little bit later, but a lot of people are wondering, when is this bottom? Is it going to last another week? Is this going to be another month? You mentioned at the beginning of the show, this may be the beginning of this downfall, which we also believe as well. When do you think the bottom is in, and how do you decide if the bottom is in?
Yeah. So that's an important aspect to looking to potentially accumulating a longer term position in Bitcoin if you're kind of looking at that side of things. And so number one is, and this going back to swing trading, I think what's another important factor in swing trading is that a lot of people join services and they want constant trades, right? And so I think you have to be ready to sit on your hands when the market's not doing anything. Like, so for instance, the last 2 weeks in crypto have been very, very quiet. Very, very quiet. And, basically I've just been sitting on the long side with a small position on Bitcoin, and there's not a whole lot else to do. And I think it's important for everyone to, there's so many newer investors, and this, Steve, that they're addicted to the action and the adrenaline of trades. And there's a point in the market where you have to get to where you're calm, robotic, collected, and you have to be okay with sitting on the sidelines or just sitting in something. As long as the chart's not telling you something different, you have to be very, very calm and collected. So just keep that in mind, folks, is that those of you that are thinking about whether you're swing trading or not, be ready to just sit on your hands. There's nothing wrong with not doing anything. Sometimes that's the best thing to do. Now, in terms of downside, right? So this is where it gets tricky. So ultimately, my guess is there is more downside. We probably will break below this trend line here at some point in the future. Notice how this trend line kind of coincided with the supports from over here, right? So if we put a trend line in here, and let me do that a little bit better here. So you can see right in that range as well. Once this level gets blown through, which is also this area, then you get the bigger move to the downside. And right now, I have two targets on either side. One is the kind of the upside, the high end target, which is going to be this 20,000 level right here. Okay, so 20,000 would be my high end. I'll throw in a trend line right there. Okay, and then the low end I have right now is right around 12,000. So again, in terms of the chart, it would be right down here, give or take. And just to describe the couple different levels. Number one, if we get to 20,000, that's the 2017 high. That's going to represent a major support for the market. Now, again, that's my high-end target because I do believe that we're in a .com type collapse. I do believe that we're in this scenario where we're going to see a washout in cryptocurrencies. So it very likely 20,000 is not going to be enough to wash people out. Like again, in 2017, you saw this washout where people really gave up on crypto. Many people did, and we're not seeing that quite yet. People are still asking, well, where's the bottom? Where do I buy? Oh my goodness, if it gets to 20, I'm gonna sell a kidney to buy, as much as I can. I wanna see where it gets so low where people are like, oh my goodness, I might exit what little I have and just call it a day because I don't know if this is gonna survive. So that's your 20,000 level. Your 12,000 level is kind of interesting because it's number one, this pivot area going back to 2019. And also you have what I call a measured technical move. And the measured technical move comes from taking this high, which was the highest, the all-time high on Bitcoin, dragging it down to the lowest point here at 33,000. So basically 69 to 33. And then a measured move would come in where you take the highest point after the consolidation and you drop it that same amount. And if you do that, you also get 12,000. 12,000 would also be that target, that measured move target. And lastly, I love to mention this is that every previous bear market in Bitcoin has seen an 80 to 85% decline in price. If you take 80 to 85% of 69,000, you right around get 12,000 as well. So right now I'm focusing on between those levels. Now, I could be right on the high end, I could be right on the low end, or somewhere in the middle, or it could be neither. So important for us as traders to understand that all we have is the charts to guide us. Doesn't mean we're going to be right always, but again, that's my general high end, low end target.
With these targets, are you going to recommend to folks? Let's say that somebody's been in for less than 5 years. They're listening to what you say and they're like, wow, this is really interesting. I never thought it could even touch 12K. I never thought this was a thing. What would you recommend they do on the downside? Should they put more money in at 12K than they did at 20, or should it be somewhat equal? How should they decide how to allocate their funds?
Yeah, so that's a great question. And what I'm going to do, and I'm just going to speak from my personal, the way I'm going to handle it is I'm going to probably buy a 1/6 position. So what I'm going to do is ahead of time, and I've already thought about this. I've thought to myself, okay, do I want to put 100,000 in? Do I want to put 200,000 in? What's my overall total exposure of Bitcoin that I want to have? And then whatever that number is, I'm going to probably divide it into sixths or eighths. And so what I'll do is at 20 or maybe just above 20, because there's always a chance. I feel like a lot of people are waiting for 20. So if it hits 20, it's probably going lower. If it doesn't hit 20, it might be the low. So what I do is I like to put it in just above 20. I'll probably put it in, knowing me, I'll put it in like 20,225, something close enough where I'm not paying up that much, but where it's not a huge deal if it does touch 20 and I'm like, I got $200 higher, not a huge deal. So I'll do let's say 1/6 position there. And then what I'll do is I like to just put out automatic buys. So I'll probably say, okay, well, I have six total buys. So I'll do every, let's say 3,000, right? So then 17,000, I'll put another same amount, 1/6. I'll put another at 14, another at 12. And then that'll still leave me 2 opportunities to buy if it does even go below my target, because I've learned in trading, whether it's stocks, crypto, or anything, things can go below even your low end. So I want to have a little dry powder there. My guess is if it pierces 10, I would put the other 2/6 to work. So there's 2 methods here. Number one is you can either do it where you do them evenly, buys, or you could do smaller buy first, a little bit bigger the second, a little bit bigger the third. The key is know your ultimate hold amount, your dollar amount, and don't go over that. You never want to over allocate. So you don't want to buy your full position starting 1 and then you're like, oh crap, it went down 5 more thousand, I'm going to double up then. Way too much exposure. Know ahead of time and plan accordingly.
That's beautiful. I think that would help so many people, Gareth, hearing your explanation and your thought process there. So thank you for sharing that with us. One thing that I wanted to highlight was in crypto, when we fall heavily in prices, a lot of times you'll see exchanges freeze where there's so much activity. Everybody is trying to get in and they can't. And unfortunately, a lot of people will miss out on their trades. And Gareth mentioned buying above at a key level is so important, especially in crypto as this industry is still a baby. My next question, Gareth, is given this is a bear market, given that the stock market is looking pretty appetizing, a lot of charts are reaching critical structure from 2018, 2017, looking at really great buying opportunities in the future of this bear market. What are you looking at outside of Bitcoin? Are you looking more towards the stock market? Are you looking at altcoins? A lot of folks are very curious about altcoins. How do you decide in a bear market which altcoin is good and which altcoin is bad, and should they even bother with altcoins in a bear market? What would be your take on coins or investments outside of Bitcoin?
Yeah, so we'll start with altcoins first. And I think it's important that altcoins are essentially the small caps of crypto, right? So small caps companies. And what I mean by that is that, I've traded 20 plus years, and in bear markets, small cap stocks always underperform. There's less liquidity. Liquidity dries up. Eventually they get kind of in that period of being so low that there's going to be a couple bigger sellers that are just like, okay, I'm done with this. I don't want to sit in this. It's getting too crazy, and they dump it, and then lack of liquidity can cause those to drop. So what I would recommend is, in general, understand to stick with best of breed. Bitcoin, if you're going to go to alts, stick with like Ethereum, some of the top ones. And I also think it's important to recognize that if we are going through a .com type scenario, some of the alts or quite a bit of the alts will not survive. I've gone on record saying I think 90 to 95% of alts will be wiped out in this period. We've already seen it, unfortunately, with Terra Luna, right? And Terra Luna is essentially worthless at this point. And that was one that had a mega sized market cap at one point. So I think take that and say to yourself, if that can happen to Terra Luna, there's nothing that says it can't happen to some of these other big ones as well. So it's not to say avoid them. What I would say is avoid anything outside of like the top 20 cryptos, avoid, right? Because those are the ones that are smaller. They likely won't survive. In the top 20, you have to allocate correctly. If you really want to be in an alt, well, just put a tiny amount of money. It's called a speculative position, right? I do it in small caps. Occasionally I'll see a biotech and I'll be like, you know what? If their drug survives and thrives, I'll make, 15 times my money. So I'll throw $1,000 in there. And if I lose the $1,000, it's not going to affect my lifestyle at all. And that's the mentality you want to have with a lot of the alts. I think Ethereum is okay, probably. Bitcoin is certainly okay when it gets down to the levels that I've talked about, but you definitely want to be aware of the risks. Now, in terms of other investments, I'm a big swing trader, so there are certain tech stocks that are getting to key levels where I'm going to swing them, but I'm certainly not looking for longer term investments. My one longer term investment, I will admit, is gold. I do have gold. I do have some silver as well. That's more of just a safety play based on inflation, based on, again, some of the issues that we're seeing in the global geopolitical scene. But aside from that, I'm being a nimble trader. In bear markets, you have to be, and you have to understand that markets likely will go lower as a whole.
So you had mentioned earlier, hey, we're probably at the beginning. There's a lot of folks that think maybe there's a month, maybe there's a couple months, and then now that you're talking about the .com, this might scare folks. They might think it's going to last years. Is it even possible that this could last years? What's your take on the time of this?
Yeah, it's a real tough question. A lot of people wondering, and I think you have to look back at previous cycles in Bitcoin, and I think it's also important to recognize that previous cycles may not fully hold because there's a different dynamic this cycle. Meaning that in previous cycles, the Fed was always printing money. It was just a matter of how much. So the question would be then is, now that they're really pulling back on that, does that change the cycle? Does it elongate the cycle? So past cycles, past bear markets in Bitcoin, usually to reach the bottom, it's about 12 to 18 months. To actually come out and take out the previous all-time high, it's usually closer to 2+ years. So I think you have to kind of at least go in that time zone. The question is, does the Fed at some point relent and start printing again when the U.S. economy, and notice I say when, not if, but when the U.S. economy gets into recession. So there's a lot of moving parts here, but I think in the very least, I would assume that it would be 12 to 18 months from November before a bottom is put in. I believe we're right around 6 months in right now. So it still at minimum leaves for another 6 months of potential downside before we have a potential bottom.
I do have one last question. In the crypto space, we've had a handful of bear markets, but they've never aligned with a stock market bear market. What's your take on that? And given the fact that structurally, this top that we had in Bitcoin was significantly different than other tops, where we had a double top this time, and then we've got we basically have been sweeping things under the rug for many years, and it seems to be unraveling in front of our eyes. Do you think it's going to be even worse in crypto than it has in past years?
Yeah, I mean, it does make a lot of sense that it will be. And I think again, people will feel that because more people than ever invested in Bitcoin with the double top, right? I mean, if you think about that double top here, it kind of lured in a lot of buyers. Then you had the flush. And then on the way up, it lured in a whole new group of buyers when we got to those previous highs and actually briefly got above those all-time highs from the previous April here. So I do think it's going to be very, very hard for a lot of people. It's hard to watch an account that stays down and negative for a long period of time. But yeah, I do think that this is a little different. Since 2009, when Bitcoin was created, we've never had a Fed that has been aggressively raising rates and fighting inflation, right? Until recently, we were at 2% or under, according to the Fed at least, on inflation. So this is a different environment. I think you have to leave it open, right? So when I talked about, hey, I think these are my high-end, low-end targets, notice I also said, Yeah, but there's a chance it goes even below my low end target. We have to be ready for that. And that's why when you saw my structured kind of 1/6 buys, I left like two potential buys for even lower levels just in case that happens. So again, what I think is the most important thing for a trader or an investor, always expect the unexpected, right? As a trader, you never want to be surprised by anything. When you're surprised by something, it means you didn't anticipate it. It means your share size is misallocated, all that kind of stuff. So always anticipate, maybe I'm going to be wrong, and how will I be able to handle that should I be wrong?
Great. Gareth, it's been a pleasure to have you on the show. You provided a ton of value to our viewers. We'll leave Gareth's link to his trading platform, which he takes away the stress for you. We'll leave that in the description. And Gareth, it's a pleasure. Thank you for coming on, and we look forward to having you in the future.
I look forward to it too, Steve. Thank you so much for having me.
Take care. There's only one question left: when to sell your cryptocurrency. Click right here, right now, to find the 3 simple steps.